Welcome back to the Wall Street Podcast. Today we're doing a deep dive into a recent Goldman Sachs research report. It's titled Xiaomi Launch Fall 2025 Event Review, and it was published September 26.
That's right. The report really digs into Xiaomi's fall event. It looks closely at their product innovations and this big push towards premium across their whole human X, car X, home idea.
And Goldman Sachs is sticking with their BUY rating.
They are confirming that BUY and maintaining a HK66 socle price target, so quite bullish.
Okay, let's unpack the first part then, the ecosystem premiumization. Starting with smartphones.
Yes, the Xiaomi 17 series, the focus was definitely on the Pro and Pro Max models.
And the pricing on the 17 Pro seems key. RMB 4,999 to start.
Exactly. That's RMB 200 to 500 lower than the previous model.
So quite an aggressive move.
It is. It's a very calculated play to really push into that RMB 5,000 plus premium smartphone space. And the hardware backs it up. You've got the new 3nm Snapdragon 8 Elite Gen 5 saucy in there.
And that rear display on the Pro models.
Right, that rear display. They highlighted a RMB 1 billion R&D investment just for that feature. It's clearly meant to be a differentiator, something to catch your eye against the competition.
Okay, moving from phones to, well, cars. The smart EV segment also saw some developments.
Big ones. They launched premium customization services. We're talking RMB 100,000 plus packages for the YU7 Max and SU7 Ultra.
So really leaning into that high-end auto market.
Definitely signals commitment there. And perhaps just as important, delivery capacity seems to be improving significantly.
How so?
The expected wait time for the standard YU7 version dropped by 6 weeks.
6 weeks, okay. That suggests they're getting production scaled up.
It does, which is absolutely crucial if you want to compete seriously in the premium EV space.
Right, let's touch on the home part of the ecosystem, AIoT and services. What stood out there?
A major move on warranties. Xiaomi announced a 10-year free warranty for all their air conditioners sold from 2025.
10 years, including the centralized ACs.
Yes, including those. That blows past the industry standard, which is typically around 6 years.
That's a significant commitment to reliability. Could pressure competitors.
Absolutely. It raises the bar for what consumers might start expecting.
Okay, let's pivot to some of the Q&A style commentary from the report. First off, back to the phones. How does lowering the price on the 17 Pro actually help Xiaomi's overall average selling price, the ASP? Seems counterintuitive.
Well, it's about shifting the mix.
Yeah.
By making the Pro model more attractively priced, even though it's packed with features, they aim to tempt buyers who might otherwise get the base model or maybe a competitor's phone.
So pull them up into the higher price tier.
Exactly. More volume shifts to the Pro and Pro Max, which have higher margins than the base. So even if the starting price is lower for the Pro, the blended ASP for the whole 17 series goes up.
Despite maybe slightly higher component cost for those advanced features?
Right, that's factored in, but the volume shift towards premium is expected to outweigh it.
Interesting. Now, Goldman did slightly trim their EPS forecasts for 2025 to 2027 by about 2–3%. What caused that slight downgrade?
Two main things mentioned in the report. First, they dialed back AIoT revenue forecasts a bit by 2–4%.
Why the AIoT adjustment?
Mostly due to expectations of softer growth in China for that segment. It's coming off a very high base, making continued rapid growth tougher.
Okay, that makes sense. And the second factor?
A slight reduction in the expected smartphone gross profit margin, the GPM. They see it averaging around 11.6%.
And that's because of?
Primarily higher memory costs, which puts a bit of pressure on margins.
Got it. So softer AIoT growth and memory costs. Let's talk about Xiaomi's image. I keep saying they're becoming a hardcore technology company.
Yeah.
What proof points did this event offer beyond just, integrating new hardware?
Well, first, they re-emphasized that huge RMB 100 billion R&D commitment over the next 5 years. That's serious capital.
Okay, but money isn't everything. Any tangible tech outputs?
Yes, and this is key. They open-sourced their Mimo audio voice model back in September. The report notes it apparently achieves state-of-the-art results, SOTA, among open-source models.
Better than other open-source models?
Yes, and reportedly even performs better than some comparable closed-source ones, like Google's Gemini 2.5 Flash.
So developing genuinely novel AI, not just using off-the-shelf stuff.
Exactly. That's a much stronger indicator of becoming a true tech company, not just an integrator.
So bringing this back to the listener, how does all this impact you?
Well, that 10-year AC warranty we mentioned, that directly raises the stakes for appliance reliability. You might start seeing longer warranties become the norm.
And phones.
You're seeing high-end features become more accessible. Think about that rear display or the battery life. The Xiaomi 17 apparently hits 22.1 hours. These used to be exclusive to the absolute top-tier, most expensive phones.
But now appearing at lower premium price points.
Right. The report notes the 17 Pro Max is roughly 50% cheaper than its direct iPhone competitor in China. It's a form of democratizing flagship tech.
So Xiaomi's clearly executing aggressively. The report puts a pretty hefty valuation on their EV division in the sum of the parts analysis, doesn't it?
It does, US $87 billion. That's a significant chunk of their total valuation.
Which leads us to our final thought. Given that huge valuation, the new high-end customization for EVs, and the need to keep scaling delivery.
The question becomes, what kind of major funding round, or perhaps a big strategic partnership, might Xiaomi EV need next year? How will they fuel that pace to maintain leadership in China's very competitive premium EV market? Something to consider.